in this field of law. Why crypto? What got you here? What made you, I guess, in a way, pivot into crypto?
Our first client paid us in crypto around 2013, 2014. The US government, especially right now, is on a crusade against crypto. Be it the SEC, CFTC, also the IRS, they're all after crypto. And taxes and the IRS is one of the most apparent ways that the government can go after it, where things are quite obvious. The numbers are there, the calculations are there. You want to make crypto difficult, you go after the people that didn't report.
Welcome back to another episode of Girl in the Verse, the video podcast, the place to be if you are new to Web3 or curious about crypto, but you don't want to get too technical. I'm your girl asking all the questions up in this space. As always, before we get started, smash those likes, comment down below, and subscribe to the YouTube channel. Yes, YouTube, my friends who are listening in on your favorite audio podcast app. We are recording this and you get to watch us up on video, up on YouTube. So make sure to come check us out. Today, my guest is Andrew Gordon, who is the managing attorney of Gordon Law Group. At the practice, Andrew concentrates on tax controversy and compliance, cryptocurrency law, FTC defense, internet law, and corporate litigation. I like to say Andrew should become one of my BFFs. That's what I like to say. Andrew, thank you so much for joining us today.
Well, thank you very much for having me.
So, I want to get started with this. You are very vocal up on Twitter. For those who are not following you yet, I'm going to put all those links down below. And recently, you had tweeted out, paying your employees in Bitcoin. We know you're bullish, but you have to slow down and understand the taxes behind it. Now, Andrew, I want you to maybe start off because we do see, right? We're in year 3, maybe year 4 or 5 for certain, crypto enthusiasts who are now working in Web3, right? And a lot of companies are, asking certain employees, do you wish to get paid in USD or Bitcoin or Ethereum or other coins? What do you make of this? How should people, especially employees, what should they choose to, get paid in?
Sure. Well, to begin, it's a great thing. It's great for crypto adoption. It's great for the space overall that now employers are giving options in many cases so that employees can receive crypto instead of fiat for their wages. So if you're an employee, if you're an independent contractor, or you're just doing some side gigs and you're getting paid in crypto, one of the most important things to know right from the start is that it is income to you. It is taxable at the fair market value of the crypto as soon as you receive it. So if you're getting paid in Bitcoin and that is how you're getting paid in full, whatever that amount is of that value of that Bitcoin, as soon as you receive it, that's the amount of income you receive. Not when you sell the crypto later, not when you cash it out or exchange it. Those are still also taxable events. But the first and most important one to realize is that as soon as you get it, that is income to you and you'll have a tax due as a result just from receiving it.
So, which makes sense. I mean, as we keep growing in this space, it sort of makes sense. What are the sort of tax implications of, let's say, an employer paying employees in Bitcoin? Is it better for them or it doesn't really change? Or, explain to us, is it better to offer Bitcoin or offer USD?
Sure. So from the employer side, it really doesn't matter. The same payroll taxes apply. And if you have employees or you have independent contractors, you still need to treat them the same way. And the same rules still are in effect, even though it's crypto, which means that you need to report the earnings on a W-2 for the employee or a 1099 for a contractor. And that amount on those tax forms needs to be in US dollars. So although you're paying them in crypto, you do still need to calculate and account for the USD value. And nowadays, it's actually gotten quite easy for employers to allow their employees to receive a portion of their wages in crypto. So much so that it's almost without really any effort of the employer. For instance, Coinbase now has a service where using your payroll company like ADP or Gusto, you can select a portion, the employee can select a portion of their pay to get directed to Coinbase, and then automatically Bitcoin is purchased or whatever crypto you choose. And so it makes it very easy for the employers to offer that to the employee. And then for the employee, it's very simple for them then to have their own custody, their own Coinbase account with their crypto, but they don't need to think about buying every time they get a paycheck.
What is the best play? I mean, I've had certain contracts where I've chosen to get paid in Bitcoin. And I'm going back to your tweet where you said you have to slow down and understand the taxes behind it.
So let's get into actually some of the nuances of why it may not be a good idea to receive your wages in crypto. And so, for example, let's say today you get paid $1,000 of Bitcoin, the equivalent to $1,000 USD in Bitcoin. And now today you have a taxable event. You've got to report on your taxes at the end of the year, $1,000 of income. But say the price of Bitcoin goes down. We're all hoping this isn't the case, but let's say it goes down in a month and the price drops in half. And now that $1,000 is only worth $500. You still have income and you still will pay taxes based on the value as soon as you received it. In the eyes of the IRS, you have income, and then you chose to speculate or invest and go long, and then hold on to the crypto. So if the price goes down, you can sell it, realize a capital loss, but you still have income of the initial amount, in our case, $1,000. Where this gets really nasty is capital losses can only offset income up to $3,000 a year. So let's say instead of $1,000, let's add another zero. Let's say this was $10,000, but then the price dropped down in half to $5,000 and you sell it. Well, you'll only be able to take $3,000 to reduce your income. As a result, you'll pay taxes on $7,000 of income, even though when you cash it out, you only got $5,000. I kind of went through that pretty fast, but the overall effect is nasty. Like I said, you end up paying more in taxes than sometimes even the value is that you have left. So you've got to be very careful. If you get paid in crypto, you're making an investment. You're speculating in the price of crypto. And if it goes down, that doesn't reduce necessarily the income you already received.
Okay. I'm like super, I am shocked. I mean, my face says it all right now. I'm a bit like, whoa, because it's happened to me in the past where I got paid in crypto. But what I did was I transferred it right away into USD. Is that maybe the better play? Let's say, for instance, right, we have, an audience here who right now they just got their paycheck in Bitcoin or Ethereum or whatever. What's the better play?
So it depends on your risk tolerance and also your investment decisions. The best play is to know what happens in the future, but I, for one, do not. And so to be conservative, you should sell at least an amount of your crypto for USD or stablecoin to cover your taxes. And so say your tax rate is 30%, you should sell at least enough to cover that, because you're going to be on the hook for that likely no matter what. And that way you've got your downside protection locked in and you can at least pay your taxes. It's up to you, though, if you want to sell more than that or less, and that depends on your risk tolerance. But overall, we suggest, and most of our clients will take that approach where they sell at least enough for taxes.
Interesting. So I'm here thinking, even for those newbies who are coming into the space, or those who are, just signing their first contracts, is it safer or better to suggest to just get paid in USD, just get straight up, forget about getting some sort of crypto? I mean, we still don't know what will happen by next year, but is it easier, safer to just say, you know what, thank you for the offer, but I don't want Bitcoin. I just want to get paid in USD.
It's certainly easier.
Yeah.
It's certainly safer. But most of the people here and watching likely are proponents of crypto, believe that crypto is going to go up. And so in that case, it's a easier way to, for instance, dollar cost average or to buy in periodically as if already you're getting paid in it. That work is already done for you. But it is more complex. There are greater risks. So you've got to weigh all of those things and kind of make a decision for yourself. At the end of the day, I always tell people the number one priority is get paid. Doesn't matter the format of it, but whatever will get you paid quickly and to make sure that it's in your pocket. And so some companies nowadays do everything in crypto. It may be difficult for them to pay you in cash. In that case, you can sell a portion or decide how to proceed. So it really depends. But overall, there's not necessarily a downside to receiving crypto other than it'll take a little bit more accounting work. And you've got to just be aware of your investment decisions and how the price of crypto in the future may not always go up.
Now, Andrew, let's say we receive the amount in Bitcoin or Ethereum and whatnot, and we decide to stake it or hold on to it. We're hodling the amount we have. What does that mean for the end of the year and your tax implications?
Great question. So as soon as you receive it as income, as payment for you, you still have that income. It needs to be reported on your taxes. Even if you hold it, even if you never cash out or trade, you still have that initial income event. Just like if you got paid cash and then never did anything with that cash, you still have that income. So it needs to be reported on your taxes. And that's really where that risk arises, because you're now holding Bitcoin, but you owe taxes, or another token, and taxes are paid in US dollars. So you've got to somehow come up with that cash to pay your taxes on the income that was earned in cryptocurrency.
Interesting. Yeah, this is very interesting. Wow. I'm learning so much, and I hope you guys are too. Drop the comments down below. Andrew, what happens if your employer goes out of business and stops paying you? What happens? And then they're not paying you in Bitcoin, they're not paying you, what happens then?
Yeah, it happens. It's very unfortunate. And it depends on the circumstances. Number one, was there any sort of contract? Was this just an oral agreement or an agreement on Telegram or Discord to pay you? Or was there an actual employment agreement or independent contractor agreement? That's a big factor. Also, where are they located? Do they have a U.S. presence? Is there somewhere that you can hire an attorney to send a demand letter? Or are they just on the internet or in the Cayman Islands, which will make things more difficult? So in some cases, there is still recourse. But overall, we suggest to our clients to structure your agreement in a way that if they stop paying you, you're hopefully not at a loss of too much time. So don't wait to get all your payment at the end. Make sure that you're getting paid over time, that it's periodic. And nowadays, it's very unfortunate, but crypto projects come and go. So don't just have a debt on the books. We see with FTX and some of these larger exchanges, there can be very large debts. Doesn't mean that it'll ever be paid. So do everything that you can to get paid timely.
How can businesses navigate the potential risks associated with paying employees in Bitcoin, such as the fluctuations, like we were saying, right? Bitcoin goes up one day, goes down one day. How does an employer, mitigate those risks?
Right. And so those are treasury management decisions. For instance, if a employer is going to allow their employees to be paid, part of the question becomes, do we hold Bitcoin as a firm, as a company, or do we just buy that token when the employee wants to receive it? And so it depends on the investment decisions of the company, if they're long in the token or not, or if this is merely a convenience for their employee. If it's merely a convenience, then using services like Coinbase where it's automatically converted, that way you don't have that risk exposure. So if you're an employer out there and you want to offer your employees a new way to get paid and welcome 2023 with new technology, you don't necessarily need to have exposure on your books to cryptocurrency. You can still pay your employees by having dollars immediately converted to Bitcoin or another token and then dispersed to them.
I'm trying to think as well, those who get paid in these coins, what should they be looking at or looking for? Because now I'm thinking, you get paid in crypto, but yet you're still owing taxes in American dollars. And right now we are talking US. I live in Canada. It's probably the same here, relatively the same. Um, how do you like? I'm just trying to understand how we can juggle this, or how do you make it easier for your accountant? Let's say you're just like, personal employee here, you've got an accountant. How do you juggle all of that with your accountant? Like, well, I got paid in this amount, and then I got a bit of Ethereum, and then I got some Litecoin, and then I got, how do you juggle all that? Is there like an app out there? Like, dare I say an app? Oh God, an app that can help you, figure all this out, or help you calculate this stuff? Or what's the better play? Speaking to a lawyer, speaking to your accountant? What do you suggest?
Yeah, if you're getting paid in crypto, it's likely a trigger to then talk to an accountant or a tax lawyer and have professional help. There are softwares out there that do crypto tax reporting, but especially as you get into income and some of these more complicated situations, it makes sense to have a professional, and the tax software just doesn't do it, doesn't get you all the way there. So some of the best advice I have to make that process easier is to keep track of everything. And I don't mean write down every single deposit, the date and time you received it. That's in the blockchain. That's why the blockchain exists. Instead, write down your wallet addresses. Believe it or not, all the time clients come to us, forget their wallet addresses, don't remember what wallets they had. So just keep track of your wallet address. From that, we can pull a lot of the data. Keep a list of the exchanges that you've used. Keep your login information. But even take a step further. Periodically, dare I say quarterly, download your transactions from the exchanges. We saw last year, FTX, BlockFi, Celsius, they went down and they made it very difficult to get records. So get your records, because the obligation is still on you to report, even if those platforms go down. So keep track of everything as you go, save everything periodically. We'll make it a lot easier at the end of the year.
What if you get paid in NFTs, Andrew? That's some sort of payment. How does that work?
Yeah, so that's even trickier, because the code doesn't speak specifically to NFTs and how to value those. But overall, the IRS and the US would say you've got to report it as income. The income amount is the fair market value. Well, what's the fair market value of an NFT? They vary. Sometimes you may even need to get an appraisal. Sometimes you can use things like floors or recent trading prices. So it depends. But overall, we've got to pick up a value, and you'll pay tax on that value.
Okay, so if we were to sum this up, the easiest way is to continue getting paid in USD.
That is the easiest way.
Andrew, why did you choose to even talk about this? Were you seeing things, amongst your clients, or what you were seeing on Twitter? How did you figure this out, that maybe some people were having difficulty with this, with getting paid, and what types of payments they should be getting or requesting?
Almost every day, we get phone calls from potential clients who received payment as employees, as independent contractors, or even just doing services. Maybe they wrote a smart contract and received a payment of crypto. And they now, because we're in a down market, are realizing the effect, because they held on to it. They received it, they held on to it, and now it's tax time, or just after the tax deadline in the US, and they're realizing, oh, shoot, I owe taxes. I have to pay income tax on that amount when I received it, not the value today. And then I've got to have the unfortunate conversation of explaining that, yes, that tax is still due, even though if you sell it today, maybe you get a tenth of what it was worth a year ago. And that actually happens with a lot of projects that pay their employees and contractors in their own tokens. We saw a lot of projects last year and years before emerge. They pay out, they're worth a lot of money then, and then it collapses, and that tax is still due. So we see those examples all the time, but being empowered, knowing how it's taxed, allows you to make decisions as it happens, so that hopefully when tax time comes, or the price of crypto drops, which we all cross our fingers and hopes doesn't happen, but at least then you're prepared and you're not caught with a big tax balance and no cash.
Now, I'm also curious, Andrew, right? You've been studying law. You are, in this field of law. why crypto? What got you here? What got you curious into crypto? And now, helping people online, because I see and we follow each other on social media, but you create all this content and you're providing a lot of value to, a lot of these crypto boys. What got you here? Why are you interested? Why do you what made you, I guess, in a way, pivot into crypto now?
So I've personally been active in crypto for quite a while. It's crazy how time flies, but I think first got in around 2012. Our first client paid us in crypto around 2013, 2014. So it's been quite a while. I've always been personally interested, invested in crypto. And my background as a CPA and attorney was in tax. And so it was a perfect intersection of the two because I saw early on, especially in 2014, there was little to no guidance. And over the years, there's been more guidance, but taxes is a way that if used appropriately, you can massively increase your gains, or if not used, it decreases your gains substantially. All the time, people are talking about investment strategies or speculation, but often ignoring tax. But tax is part of nearly every transaction. And so I saw early on by focusing on that, helping with the compliance, but also tax planning, we're able to use the code to our advantage, stay on the right side of the law. The US government, especially right now, is on a crusade against crypto, be it the SEC, CFTC, also the IRS. They're all after crypto. And taxes and the IRS is one of the most apparent ways that the government can go after it, where things are quite obvious. The numbers are there, the calculations are there. If you want to make crypto difficult, you go after the people that didn't report. And we're able to help those. We're able to help investors comply, follow the law, not have this adversary of the government, but use the code, as I mentioned, to your advantage, and to be informed, so not taken by surprise. All the time, everyone's talking about how the SEC regulating by enforcement, no one knows what the code is. We don't know whether or not a token is a security or not, and how we test this, how we test that. But with the IRS and taxes, most of these things are quite decided. There's still gray areas. But for the most part, the decisions for the tax effect that impacts most people on a daily basis is known. It just has to be communicated and then used appropriately. And that's where the gap exists, and that's what we're hoping to fill.
It's never financial advice, but what would you say to someone who, happens to watch this video, is new to Web3, new to crypto? What would you tell them right now? Maybe some sort of best practices as they either enter the space or, start getting paid in crypto.
Sure. So not financial advice, as you mentioned, not tax advice either. But I personally believe dollar cost averaging is a great strategy. People often try to time the market. You see some news on Twitter, I got to buy, I got to sell. You'll never get it right. By the time you've got the news, are you early? Are you late? Who knows? So dollar cost averaging, buying periodically on a certain schedule, a certain amount, not letting the news impact you, and just hoping that over the course of time, the prices will increase. And that's where getting paid in crypto does make that easier because it creates that structure. It creates that timeline for investing in crypto periodically.
I love that. Thank you so much, Andrew. I really, I think a lot of people have this question on their mind, and hopefully before they go sign a contract, which Andrew said, please make sure you at least have a contract before you embark on a journey with a project or a business in crypto. But this is, a hot topic, a question on a lot of people's minds. So I'm happy that we were able to, at least help a lot of people understand the implications of getting paid in crypto versus not getting paid in crypto. As always, friends, I find the hottest conversations are happening up in my DMs. I don't know about you, Andrew, but they are happening up in my DMs. You can always feel free to reach out to me. I'm on Twitter, TikTok, Instagram, YouTube, all of them. So come find me there. I will put Andrew's information down here below. Make sure always click the links I provide. No other links. Andrew nor Andrew or I will be contacting you to find out your crypto trading. So please make sure that you are aware that's not us. never respond to us if we're asking you about your crypto trades. And, I want to invite everyone to comment down below your questions, and let's get Andrew back on the show and answer some of your, questions. Andrew, where can we find you?
Yeah, our website is a great resource, gordonlaw.com. Also, Twitter, Gordon Law LTD, YouTube, TikTok, you name it. We post a lot of useful free information, a lot of guides, how-tos. So please follow us on all the above.
Thank you so much, Andrew. I appreciate it.
Well, thank you very much.
Bye, guys.